Business is more than grinding to get it done. It's people, process, and payroll done right. It's protecting your team, leveraging every penny out of every dollar to build and grow. From HR to insurance, from strategy to scale. We give you the playbook so you don't have to figure it out the hard way. This is the PEO Playbook, hosted by Chad Philly with Staff Brokers Inc. Get valuable insights and learn to grow your team without HR headaches. Let's get started.
Good morning and welcome back to the PEO Playbook podcast. I am Chad Philly with Staff Brokers, and joining me today is CEO of Staff Brokers, Marty Gray. And as usual, we're going to get into it about just some of the intricacies of PEO and how they small businesses manage the everyday headaches associated with payroll, work comp, and human resources. Marty, how you doing?
I'm doing good. It's good to be back on the playbook.
Oh, I'm glad you're here. We got some get some educational stuff out there and let people get a little bit better feel of what PEO is, because it is a complicated thing to those that haven't been in it for 20 plus years. For up today, just we kind of wanted to touch PEOs deal a lot on the payroll side of things with tax filings and compliance. Really wanted to touch on how PEOs assist those small businesses that operate and have employees in multiple states or locations in multiple states.
Yeah, so we've helped a lot of our entrepreneurs and clients with multi-state jurisdictions, and it even drills down in some states to county by county, because there's sometimes county taxes too. And so it's
County, city, yep.
so it's
Run
just a
into that.
matter of listening to our client, finding out exactly where they're located, letting them know that we have the experience with PEOs that we deal with, have the experience of knowing exactly how to handle and all of the paperwork that's needed on the onboarding process and the processing of payroll for city, county, state jurisdictions. The other thing that's been really good for our client base is the immediate need for change. So you're a Florida based company, you've always been Florida based, but you got a big job in Georgia. You're going to be there for a while, or you're going to open up a new location in Georgia. You know, what a hassle it is doing it all on your own with a PEO partner. All of that paperwork, all of that insurance with the work comp is just one step and one conversation away from you basically moving forward into that new location.
Right. And the PEO there is able to help a lot additionally, as far as, because, even just with payroll, paid sick leave, minimum wage is not necessarily the same in a transfer of states. When you're going, you may have different rules and regulations associated with each state that you're in. Gives the PEOs there to kind of be in the business owner's corner to let them know that, hey, here's the new set of rules
Right.
based on where you're at.
I like to say you don't know what you don't know until you get there. But with a PEO partner, you have that place, that location where you can go to and just ask the questions. They let you know, and you can ask these questions before you make the move. We have lots of people, they're going to bid a job in another state. They have no clue what their job cost is going to be for that new state. So they'll go to the PEO and say, what would my work comp be? What would my state unemployment be? What would my overhead per employee be in this job site if I bid it and win it? Sometimes they win it, sometimes they don't. But they have that location, they have that partner they can go to and get those answers to. Because it can sometimes be a significant difference from a tax perspective. Whether I usually use blue state versus red state as an example, where the blue states are significantly more tax oriented. But work comp is also something that, given the exact same work comp code, you can go from one state to another state and be several percentage per hundred off. And if you don't have that built into your job costing, whether it's worth going there and doing the job beforehand,
Right. You can bid yourself into a lose situation if you don't know what's going in there. Also, in touch a little bit on when it comes to state unemployment. You have different rates in different states, and the businesses typically have to file for their own state unemployment number for each new state that they go into. you touch a little bit on how the PEOs are able to help with that? Because I know that there's sometimes it's all filed with the PEO, and then sometimes the business has to stick to their own state unemployment rate.
Right. So that is a state by state basis. When given the option, the PEO will direct you to use the option that's in your best interest. So if for some reason your brand new rate is of being an employer in a state is higher than their rate, you want to use their rate if possible. And the opposite's true. If for some reason we have a brand new client who has an exceptionally low rate and for whatever reason the PEOs is slightly higher, we'll and direct them to use their rate if the state allows that. Some states are mandatory. You have to use the client's rate no matter what. Some states allow you to if you're in a PEO relationship, you have to use one. So there is no given rule state to state on that. And that's can be confusing, but the PEO knows all the rules. So we're able to really look at that on a case by case basis and give you the guidance as to what's our client's best interest. The other thing that is not well known, but the state rate for state unemployment or the amount you tax on an employee's income is different from state to state. Florida, it's the first 7,000, but other states, it's significantly higher. And that's something worth educating our clients on as they move to other states so they understand that the long term costs are significantly higher in some other states.
Right. Exactly. Yes. Federal unemployment is 7,000 universally in all states, but yes, each state does have different rates. And like I said, Florida is 7,000. But then I think I was just seeing the other, for 7,000 in wages per calendar year. But then I was just looking, and I think Washington State is somewhere above 50,000 that you're paying that unemployment rate on. So that can be a huge factor as it comes to moving in and out of,
Right.
especially permanent location and hiring people, because then you are going to be paying the unemployment rate for that particular state for those people.
Yeah, and they want that money. I mean, that's the genuine or the real problem of one of the things of determining whether you're just going to pick up a crew and move them all the way to Washington State to do the job for 30, 60, 90 days and the rules that will apply to that. That's all about the states wanting their state unemployment while those employees are there, whether they live there with residency or not. That's what really drives those things, and that's where the PEO just is a huge help.
Mhm. Another thing on that is PEO can help with if you've got employees that travel and work in multiple states. The PEO is really good at helping the business navigate. Do you have to pay unemployment on them in multiple states, just one state? Typically, it's you're paying them out of their home state where they live, because theoretically that is where they would be going, assuming unemployment came about for them in some form or fashion. But there are some states and jurisdictions, city, county taxes, where as soon as you go start working there, that particular state does want their money. And that's just like I said, you don't know until you know. So it's one of those things that having the PEO partner there is very beneficial from that point of view, that get a heads up on what you're getting yourself into until it's too late, because tax problems aren't the best thing to be involved with.
Right. And the core of what Staff Brokers does is bringing a quality PEO to the table. And I have found over the years, state unemployment, federal unemployment, these numbers tend to get diluted in the bidding process between a good PEO and a bad PEO. And what I mean by that is at the core, a bill rate should have your FICA, your FUTA, your SUTA, your work comp rate, and an admin fee. And let's just say that all adds up to $21 on the 100 for a very specific job type, right? Some PEOs, we don't deal with a lot of them, want to do bulk rates where they don't take off or lower that 21% after the employee hits a 7,000, after the federal unemployment is, or even after somebody's made more than I think it's 120,000 for federal taxes, where some of that starts to fall off now, and they're just charging a flat rate. So we'll compete and we'll be at 21, but the other guy will be at 19. And it looks like we're higher, but the bottom line is no. After you start paying that employee more than 7,000, the rates drop. They drop the 2.7% for SUTA, and they drop the 80 cents for FUTA, and the average would actually show your true numbers. What is my true costs? I personally like the broken out rates so that there's just nothing to hide. That also works in overtime. There's no additional work comp on overtime, where if you're working on a flat rate billed rate through a PEO, that bill rate is charged the same all the way through. Well, that's them making a little bit more money off of you
Right.
in those areas. And, that's okay if it's known and we do the math and we break it out and say, in this particular case, the bulk rate, but just because it's a lower rate doesn't mean that they're a lower price overall.
Yep. And also something along those lines that PEOs do when it comes to those taxes is some of them, depending on the states that you're in, typically because your employees are switching federal ID numbers that they're working under, you have a reset of your taxes, of your federal and state unemployment taxes. So if you're making a switch, depending on what time of year it is, you may have to repay some taxes. But some PEOs, depending on the legality of how they set themselves up and whose unemployment rates get used when you do make those transitions, the PEO can accumulate prior data and factor that in. So in states where it's not mandatory, a client may be able to not have to repay any extra taxes per se for that year. Well, I think that is enough boring tax information for everybody as far as PEOs go, but it's the life of business owners and what they got to deal with. So thanks for joining us on this episode of the PEO Playbook, and we will catch you guys next time.
Thanks for tuning in to the PEO Playbook, where we help business owners unlock the power of PEOs and take their team to the next level. This episode was proudly brought to you by Legacy Sales Engineering. If you're ready to simplify HR, scale your business, and put the right team behind you, visit staffbroker.net to get started with Staff Brokers today.